Think a simple journal entry mistake isn't a big deal? Think again. From misreported cash flow to undetected fraud, even the slightest slip up can have serious consequences. Today we're going to expose the most common journal entry mistakes, and more importantly, we're going to share with you how to prevent them before they wreak havoc on your financial records. Let's take a look at a few common errors and what you can do to fix them, or better yet, prevent them from happening in the first place. Think your books are truly closed? Think again. This common mistake can secretly reopen them and throw your organization into some sort of financial crisis. Journal entry mistake number 1. A closing error occurs when entries are added or changed after you've closed the books. Closing the books means that all the data has been entered and the accounts reconciled for a specific period of time. Prevention technique. Prevent closing errors by setting a closing password in your accounting software. This way, only one person has the power to make changes after the close. No one can go in behind your back and fiddle around with the numbers. This next one I call a silent killer. It's an innocent looking mistake that can completely skew your financial reports and even occasionally land you in hot water with the IRS. And let's face it, none of us want that. Journal entry mistake number 2. Misclassifying transactions, such as recording an expense as an asset or vice versa. Misclassifications can distort financial records and lead to an overstatement or an understatement, as well as incorrect tax reporting. Prevention technique. Make sure the staff working on journal entries understands basic accounting principles and the correct classification of transactions. Your chart of accounts will help with that. Regular training also helps. Are you unknowingly paying invoices twice? This mistake is unfortunately shockingly common, and it could be costing your company more than you realize. You may think that your suppliers would automatically return that second payment, but a few actually do. While it's true that most, but definitely not all, will issue a credit memo, it creates a whole lot of other work and is a whole different bag of worms. Journal entry mistake number 3. Duplication errors occur when entering an income or an expense twice. It's possible to duplicate anything from a credit or a debit, purchase orders to invoices, and sadly, it happens more often than you might imagine. Entering invoices twice can inflate expenses. On the other side of the equation, entering a receipt twice overstates income. Prevention technique. Use of best practices helps prevent and resolve duplication errors. Duplicate checking of all entries helps. Use of a trial balance at the end of the period helps identify potential duplicates. Also, many accounting software solutions can detect and flag potential duplicate entries, helping to prevent this mistake. But of course, it only helps prevent the mistake if someone goes in after those entries are flagged and actually checks them. Journal entry mistake number 4. Likewise, omitting transactions, as opposed to entering them twice, can lead to inaccurate financial records. This is particularly common with cash transactions and other minor expenses, so that your records may be off a slight amount. But that doesn't mean it isn't serious. Prevention technique. Establish a systematic approach for recording all transactions. Conduct regular reconciliations of bank statements and accounting records to ensure that all transactions have been accounted for and have been accounted for properly. And when your trial balance is off even the tiniest amount, find the error and fix it before you close your books. Journal entry mistake number 5. Recording unbalanced journal entries where the total debits do not equal the total credits. This can result in inaccurate trial balance and financial statements. Prevention technique. Always verify that debits and credits are balanced before finalizing any entry. Many accounting softwares have built-in checks to prevent this, but if yours doesn't, then doing this manually every time will help stop any errors of this type from slipping through. Do any of these mistakes sound familiar to you? Drop a comment below and let me know which one you've seen most frequently. Would you catch an expense recorded in the wrong month? Most people don't, and it can cause some serious issues. Journal entry mistake number 6. Recording transactions with incorrect dates can affect financial reporting periods and lead to errors in your financial statements. Regrettably, when verifying information, most professionals are more focused on making sure that everything balanced and don't pay sufficient attention to the dates. This can result in either expenses or income being recorded in the wrong period. Prevention technique. Always double check the dates. Make sure the staff understands the importance of getting the items recorded for the correct period. Journal entry mistake number 7. Entering incorrect amounts. This can be due to human errors such as typos, misreading numbers, etc. Automation errors, because let's face it, OCR is not 100% accurate. Lack of review processes, i.e. no second set of eyes is looking at the entries. Prevention technique. Implement a review process where another team member verifies the amounts before finalizing the entries. You might also take advantage of automated data entry. Where possible, use of automated data entry tools that reduce the risk of human error. For example, invoice automation tools greatly reduce the amount of data entry that needs to be done, but this is not the silver bullet that we'd like it to be. For starters, no matter what automation solution a company has purchased, rarely are organizations successful in getting 100% usage. So, some manual data entry is going to be required. And then the OCR readers, which automate the data entry, are not perfect. They're good, but the accuracy rate is not 100%. It might be very close to 100%, but it's not 100%. So, even under the best circumstances, some human efforts are still required. If someone's trying to hide a fraud in your books, this is exactly how they do it. And it happens more frequently than you might think, but we've got you covered. Here's how you can stop it in its track. Journal entry mistake number 8. Vague or inadequate descriptions in the journal entries can make it quite challenging to understand the nature of the transaction, leading to confusion and errors. What's more, they sometimes are used to facilitate an ongoing fraud that is being committed by an insider. Few like to talk about this, but it is a very real issue and concern. Prevention technique. Require detailed and clear descriptions for each journal entry, explaining the nature and purpose of the transaction. No exceptions allowed. Do not permit journal entries without backup, or with no explanations or one-word explanations. And an explanation with the wording like interest adjustment or deposit adjustment should not be tolerated. The details should be supplied either in the description or in the backup. If you're getting value from this talk, please click the like button to let us know that we should create more talks like this. Journal entry mistake number 9. Unauthorized journal entries can be problematic. They can also compromise the integrity of the financial records and your entire accounting process. Prevention technique. Establish robust internal controls that restrict who can create, approve, and post journal entries. Make sure that you incorporate a clear separation of duties where different individuals are creating and approving entries. No one, including high-level executives, should be permitted to put through journal entries if that is not a standard part of their job. Sadly, occasionally a crooked employee will use journal entries to hide an ongoing fraud. It's how they facilitate a fraud in another part of the business, and it is why some frauds go on for so long. Some of them go on literally for years. The end result is it costs the organization a great deal of money. Click on the link in the screen and in the description now to watch our breakdown of real-life journal entry frauds and how you can catch them before they do damage. Don't let that happen on your watch. Good luck.